First Minute Capital is a $100 million seed fund, proudly backed by a number of tech founder LPs, including 30 unicorn founders. Part of our DNA is to take wisdom and lessons learned from one generation of successful entrepreneurs and share those lessons and pieces of advice with the next generation of successful founders. And that's really what this webinar series is all about. My First Minute is a fun opportunity to informally speak to some of the world's top founders on the first minutes of their careers, how they see the world, and general leadership advice. My name is Lina Wenner, I'm an investor at First Minute Capital, and today I'm speaking to Riccardo Zacconi.
You were born in Rome, your father was a dentist, your mum was a Hungarian refugee artist who actually fled to Rome, I read. And then I was really excited to see that we share some similarities in our background and that you studied economics, so we share that degree. And then you actually went to be a consultant with LEK and BCG in Germany as well. So some hope for me, then your life became a lot more glamorous than mine. But maybe starting at young Riccardo, how would you describe young Riccardo when you just, finished your degree? What expectations did you have from life? Where did you think you would end up?
Yeah, sure. I studied in a sec. Basically, only one correction is my mom, she went to Rome to study actually arts. So she escaped from Hungary to go to Munich. But regarding my background, yeah. So my ambitions when I finished university, I studied. Basically, I always wanted to become an entrepreneur, but I had no idea what to do. And so I always tried first in my studies, and then later when I chose the first job, which was to go into consulting, since I had no clue what to do, is to leave the doors as open as possible. That's why I studied economy. Which didn't basically close down any doors. Then I still didn't know, then I went into consulting, still didn't know what to do. So it left me doors open and allowed me to look into different things. And it's only until 1999 when the internet boom actually started, it was actually 98, that I jumped ship and I went into startup. And in 1999, you actually, so you went to the web portal Spray, which was an online portal similar to Yahoo. And I think that was a ridiculous growth curve. So you grew from 20 to 800 people in a year, to then essentially crash in the dotcom bubble. So when I read about this, I was just curious, did that discourage you from wanting to start something again, that sort of incredible scaling and then essentially falling a little bit flat? No, I think it was exactly the opposite. I think that when many people who joined the internet boom coming from highly paid jobs like investment banking or consulting, then decided to go back, I thought it was crazy because we learned so much. And I call it the most expensive MBA you can do. And then not to continue in what you have learned and to go back, I think it was for me, basically a closed door, because I definitely wanted to continue. And so I was looking for opportunities. And then while I was looking and I came up with different ideas, then I received a call from Benchmark in the UK. And they said, look, why don't you come over and we would like to sponsor you as an EIR, as an entrepreneur in residence. And that's why I moved from Germany to London. But for me, it was clear that I was not going back. After you get the freedom, the huge opportunities and whatever, and basically, and the sky is the limit. You don't go back into the box.
Yeah, and I guess as a consultant, you're very much at will of your client, and once you're an entrepreneur, you're much more free to do what you choose. You then went, as you said, to be a VC for a bit, or an EIR with Benchmark, and rather than actually then starting something, you went to join an online dating site called uDate. What got you excited about that?
Basically, when I joined before joining Benchmark, I took some time off and I collected a list of different ideas, about 50 ideas when I came in. And one of these ideas was online dating. We developed, when I was in Spray, one of the first dating sites in Europe. and it became very big. Then later, after we sold the company, it became Love at Lycos. And we didn't have any more money for marketing, but it went through the roof. But we didn't ask for money. It was a complete free service. And only after I left, I saw that there were dating services like Match.com in the US that were doing really, really well. So this was the idea that I pushed more. But then we looked into several ways to enter this market. And one of these ways was to invest in an existing company called uDate, which was only active in the US and in the UK. I remember that the European market at the time was completely free. There was nothing in terms of paid dating. And so one of the ways to enter the market was to invest in uDate and then to roll out their model into continental Europe. So this was the plan. And Benchmark made an investment offer. They refused the offer from Benchmark because the company was profitable, and instead made me an offer to come on board and build out the market. So it was not just an offer as an employee, it was an offer basically to build something on the back of their product and to build a global leader. But unfortunately, after 3 months after I joined, the founder, Mel Morris, got an offer to sell the company. Unfortunately, or maybe fortunately, because I didn't make
you made
as
a fair
much
bit of
as
money, yeah.
Yeah, well, no, I didn't make as much as I was hoping for because it was very early in the journey. There was a vesting period, but I made, let's say, I made a bit, and that bit allowed me really to start King, which we started busy with my former colleagues from Spray, and with Toby, who I worked with at uDate.
So I think it's funny because you started King with 5 other co-founders, so it was a huge co-founding team, and I think the only other very successful company that I can think of that had 6 co-founders is PayPal. There might be others, but that was the only one I could think of. Maybe tell us a little bit more about how that came about, and also whether you would choose to pick that larger co-founding team again today, or is it mostly a headache?
Look, if I knew how to program, if I knew how to design a product, if I knew how all these things, then I wouldn't need any founders, co-founders. But since I don't, I'm really good, I think, at picking good people. And I think that, we were never greedy. So for us, it was not about making each of us the most. It was about being successful together. And we started all with equal shareholdings. And over time, as we took more risk and, different people had different amounts they were willing to invest or could invest, and we had different shareholdings, but we always maintained an equal partnership. And I think this has been very important.
And did those different shareholdings then also help you resolve disagreements, or was it because everyone had their own domain essentially where they were making the decisions, and that's how you didn't really have any disagreements? What happened when you disagreed on something?
I think that I can count maybe on one hand the times where we disagreed. We usually agreed mainly because of trust, because we had different areas of responsibility. So I'm not going to tell Thomas, who was the CTO, and Lars, who was CTO, basically what to do on the tech side. I'm not going to tell Sebastian what to do on the design side, etc. But there are some times where we had strategic disagreements in what area and what way to go. And there we never leveraged, I have more shares than you, but we had an open discussion. And when we still couldn't resolve these agreements, we went to the board. And the board, as in any company, is the resolving instance or the resolving authority. And so we presented our views, different views, and then the board took a decision in one way or another. Of course, we were also part of the board, but we had also independent board members and also our investors. And I think that the one time where we had a disagreement, actually I won the board decision, and we went our way, but it actually turned out to be the wrong way. So you never, it's to take a decision is more important sometimes than taking no decision. But the most important thing for us, it was to be together and to stick together.
Yeah, and you strike me as someone who will be able to recognize when they did take a wrong decision and not have the pride to sort of glance over it. I guess you guys started out with, I think, 6 months of runway, 6 to 8 months of runway when you started King, and it was largely your personal savings. You then ended up having your first near-death moment think on Christmas Eve of 2003. There's an episode with a broken fax machine. Would love for you to tell us a little bit more about how that came about.
Yeah, so we had several actually near-death moments in the course of King. And that was the very first one, because we put in actually all of our savings. I put in all my savings. I sold anything I had. I had a car before I sold the car. I had probably everything. I went to stay in the flat of a very good friend of mine for about 2.5 years in his guest room, and all my properties were in there. So it was really bare bone. And then we had money. We were trying to raise money, but it was very difficult. 2003 was a nuclear year in terms of funding. And one of our, Busy Mel, one of our investors, the founder of uDate, he said that he would invest in us, but he had an interesting structure with trustees who had to decide. So it took much longer. And so it was the day before Christmas, and I had a flight the same evening to go back home. And the fax with the signature from the trustees still didn't come. At the time we still had fax machines. And suddenly the signature was coming through. I was literally on the floor, and suddenly the signature came through, or so the fax came through, and the fax machine broke in the middle of transmission. So we were in panic, and so we had to find a new fax machine. And that's where I learned that it doesn't matter how well or how badly funded you are, you never save on hardware. So on hardware.
Yeah.
In my
Thank God for email.
We got the fax.
Exactly. In Germany, you still use the fax a lot. Anyway, you started at King developing browser-based games. Maybe take the audience through really how your vision for King changed over the years, because obviously Candy Crush, which King is most famous for, came much later. So what was the vision at the outset?
We started with the model which was offering competitive games on the web. The games were really freemium because you could play against other people for free. But then there was a model where if you were to compete with others, also for a small entry fee, you could also win a prize. And if you were the best, if you're the winner in the competition, that was basically one of the first actually real freemium models, which was purely digital. So there was no download. And everything went really well. We became #1 in our space on the web, becoming the largest partner of large portals like Yahoo, for example, until Facebook started growing really fast. So Facebook was opened up for partners in 2007, but it's not until 2009 that really took off in games with Zynga and Farmville. And I'll never forget, in the space of less than a year, Yahoo, which was our largest partner, lost 45% of their traffic in games, and we were the #1 in games on their property. So it felt as if someone had taken the floor under our feet, and that was a very, very difficult time. And that's where we had to change how we were doing things.
I think you said publicly that Facebook almost entirely crushed your company. So maybe that was near-death moment #2. And that's where you essentially also had to do quite a big pivot, correct? So maybe I think that's a very relevant moment to sort of look back on now, because a lot of companies and a lot of founders on the call are also considering whether in this environment they will have to, or it's clever for them to pivot. So I'm really curious what sort of mental shifts were required within King at the time to bring about that really important but really drastic pivot as Facebook came about.
Yeah, basically, sometimes you're forced to take decisions that otherwise you wouldn't do in the same way. And this is one of these moments. And fundamentally, Facebook was growing incredibly fast. We were, of course, experimenting on Facebook on the side, doing some side bets. But it's different if you do a side bet or if everything is basically dependent, your life or death are dependent on it. And so suddenly, with this big increase in traffic on Facebook, we had to change the way how we're doing things. So we had to divide our team. We were about 110 people at the time in 2 parts. 50% of the company continued working on the existing product on the web. And the other 50% of the company was divided in 5 smaller teams, experimenting on how do we take our games to Facebook. Facebook did not allow us to take our original model to Facebook. So we had to completely change how we were doing things. And that's where we started taking, instead of offering a full website of games, we started taking one game after the other, and try to make, instead of a very shallow game you would compete against others to make basically many levels of the same game. And this was the precursor of Candy Crush. And one of these games succeeded after more or less a year and a half of experimentation. And that year and a half was very tough. So we lost people, we lost some investors, and we had some very hard discussions also in the board. So I can only say that, you know, any change often is, if you do it, you know, if you do it properly, if you do it well, and if you're lucky also at the same time, also has big opportunities. In our case, we would have never done it in this way if we had not been forced to do it in such an aggressive way. We might not have launched Candy Crush. We might not have launched on mobile.
Listening to you like this, it sounds, you know, people might think that you burnt a load of cash in this time. But actually, I think you took in some investment in 2005 with Index and Apex, and you told me you essentially never touched the money. That's really unheard of, I think, in today's or yesterday's bull market. Maybe help us understand how you're thinking about profitability versus growth, and how you can have both.
Look, you know, for me, freedom is the most important thing, and also not being dependent on specific events is key. And if someone asks me, okay, what was the most important event in the history of, you know, 17 plus years I've been doing King, it's not the moment where we launched Candy Crush. For me, the most important moment is January of 2005, when we became profitable, and we've been profitable since then. I think that profitability allows you degrees of freedom. You don't have to do what, you know, potential investors want to hear. You are, if you know, if something happens, and you cannot raise the next round, you're not dependent on it because you're profitable. And for example, one of the things we discovered in this year and a half, which was really tough when when Facebook was growing, is we had built, our traffic was going down, new users had vanished, but we had a socket of very loyal players, and they stuck with us. So, and those players kept us profitable during this entire time. Of course, we had to be very conservative and be very careful how we spend the money. And then later on, when we launched Candy Crush in Q1 of 2013, we launched Candy Crush in November 2012. In Q1 13, so a few months later, we spent $100 million in marketing. In Q2, $100 million, in Q3, $100 million, in Q4, almost the same amount. And we actually didn't raise a penny. So the company became profitable with $1.5 million of investment in the beginning, at the beginning of 2004, and with our money also. And then we raised additional money from Index and from Apex, but we didn't touch that money. We only touched it once to buy back some shares.
That's really fascinating, and I think very rare in today's world. But I guess back then it really wasn't an option to just continue to raise money if you weren't getting to profitability.
My advice, and also when we invest with Sweet Capital, we invest in several companies, and I also always challenge founders to think about the next fundraising, and this money is only going to take you to the next fundraising, because maybe there is no next fundraising. So for example, now it's a very difficult moment in the market in general, where fundraising is tougher than it was before COVID. You never know. And so I think that if the model is right, you might not need the next fundraising. I think it's a good way to think, hey, what do we need to become profitable? And then to prove the model, and then from there you can scale it.
Maybe looking towards so you launched Candy Crush on mobile, you saw incredibly explosive growth. You went to IPO mid-2013 on the New York Stock Exchange. And the IPO probably wasn't quite the success you'd hoped for. I actually pulled some of the headlines, which I thought were funny because everyone made a pun on Candy Crush. So some of the headlines were like sour candy, King.com IPO does not crush it, Candy Blush, I found one, which I thought was just incredibly funny. What, in hindsight, was the issue? Because it shaved, I think, about $500 million off your market cap. Do you think it was timing? Would you have done it the same way again today?
I think, first of all, it's definitely one of these pictures in my life at King, when we were with all the founders, we were sitting on the balcony, and we pressed the button to basically kick off the bell. And it's a red button, by the way. So that was the fun part. And we went down in the arena, and I bought the first share, and then trading kicked off, and then suddenly the shares dropped. So, a little bit of a strange experience, not the best experience from my point of view, but I think there was a lot of negative. A lot of people busy saying that this is going to be a one-hit wonder. Candy Crush is going to fall off the cliff after that, and of course, it didn't help that we IPO'd in Q1 14, and we missed our first quarter in Q2 14. But if I look at what happened now after a few years, actually Candy Crush proved to be a very, very strong game, and incredibly resilient. All the estimates and the negative views of the time are completely dispelled after many years.
Yeah. If you thinking from an investing perspective, because obviously we saw we've got lots of investors on the call as well. What would you say to someone who says, I don't invest in games because it's totally hit driven and it's basically luck. If you hit something, can be a one hit wonder, as you say, but you may also end up with tons and tons of games that simply fail, and there's no formula to getting a game right.
I think that it depends from your approach. If you launch games which are more or less proven, then you can already foresee how the game is going to perform, more or less. But then at the same time, you can also foresee that the game is never going to be a #1 hit, because to become #1, you have to really innovate. And if you innovate, you really only know the day when you launch. You can already know before. You have different stages, of course, where you can optimize. But often, we develop many, many games which never saw the light of the day at King. And we spent a few years on them, and then they never launched, because when we launched them, they were not good enough in terms of retention first, in terms of monetization second. So I think it's not an easy area as a startup to compete in. But if you succeed, then the rewards are big, because you can scale the game with profitable economics if the game is innovative. And another key learning, I think, is if you have a brand, a game that performs really well, then you can keep the game up there for a very long time, if not forever, by continuously releasing new content, by refreshing the content of the game. So I think that we are in a situation now, or in a market with so many millions of apps in the store, that brands are more important than ever. It's like going to a movie store or to a movie, and then you need to decide what movie am I going to see tonight. And there's so much choice that at the end you end up basically going to the same brands that you use or that you watched in the past, because you know already what you get there and you like it. And instead of releasing new movies or instead of releasing new games, we do the same thing in continuously releasing fresh content, new levels, new features, time-limited content on a regular basis. And that's how we keep up the attention and the usership.
And I mean, Candy Crush has been, in the top 10 games in the App Store pretty much since it launched on mobile. What makes it so great? Why do we love it so much? What's the formula behind it?
I think that there are a few things. On one side, it's the mechanism of play is a very well-known mechanism of play. It's a match 3. So we did not invent the match 3, but we innovated in the way how you play a match 3 with new modalities of play, with many, many levels where you would play also with others, as you've seen from Candy Crush. So all of this basically was new at the time. We also innovated in the business model, where in the way busy making freemium, really taking it really to a level where it's actually fun also to pay. So I think and at the same time, what is also really key, but I think this goes beyond games, is to have something that is actually simple. If you make something too difficult, too complicated, then you restrict the usership, the potential target group. Of course, if you make it too simple, then it becomes boring. So it's having this very it's a path. It's a very delicate path, basically, to make it simple, but not too easy, not too difficult, and balancing that. And there's a kind of a graph, a kind of a curve, where sometimes you make it easier at the beginning, and it becomes more difficult, and it becomes easy again, etc.
And how intentional were you in going after women as a demographic? Because I think it was one of the first mobile games that really skewed pretty heavily towards women. So was that an intentional move?
Yes, it was a very intentional move. The games we developed before we launched on mobile, the games we developed on the web, the category games is called casual games. Those are, for example, match 3. Those are hidden object games, etc. Word games. Those games are particularly attractive to a segment of 60 to 70% of players are female, usually 18 plus, 20 plus. So we knew very well that would be our user base. So it's not the young guy who goes in and plays a fighting game.
You had another big moment after your IPO. So you went about 3 years as a public company, and then you actually got an acquisition offer from Activision Blizzard, and that ended up being one of the largest transactions in the gaming space so far, acquisition of $5.9 billion. And the way I understood it is that you essentially became their mobile games division. Tell us a little bit about what it was like when that offer crystallized and came about.
Well, we had a long discussion in the board whether we wanted to take it or not, and ultimately, we decided to take the offer. And there were the considerations were primarily two. One was, of course, a financial consideration. So it was a premium on the at the time value on the stock exchange. But secondly, the other consideration was also the fit with Activision, and we were thinking primarily of the team. Do we fit in the culture? Do we fit as overall strategically? And we thought actually the fit was actually a perfect fit, both in terms of mobile versus console and PC, but also in terms of category of games. So we would cover basically the casual games, focusing on a mainly female audience, versus Activision having games primarily focused on a younger male audience. And I think it proved correct. And we're not the mobile division of Activision, meaning Activision, they develop their own mobile games. But I think, of course, from a mobile point of view, we have the largest user base.
Yeah, and you drove a lot of their revenues. And
yes.
Through big changes and profit, more importantly, through those big changes, what I'm really curious about is, how do you keep the best people motivated to work on the same product or the same franchise, at least, for almost a decade? And how do you manage to retain your top talent throughout that? Is that by being an amazing CEO and building a great culture, or what were what were your tricks in being able to retain such amazing talent?
Yeah, I think there are several bits or parts to this answer, or to answer this question. The first one is the generic approach I have is, first of all, I think I'm pretty good at finding good people. But then I think the reason why I look for good people is because I think that they're better than I am. And so I give them the job, which basically means, hey, you know what? You know better than I do how to do it. You do it. I'm not going to tell you how to do your job. So I'm not a micromanager. And so I give them I give people responsibility, and I expect them to develop the plan on how to actually succeed in a specific task. And of course, we discuss it and I challenge them. But primarily, if you get good people on board, don't tell them then what they should do, but let them do fundamentally. That's the first bit.
What happens?
What
happens when they make a mistake?
So I was about to say, this means also letting them do mistakes. Sometimes, I have a disagreement with them, and I think in that case, and I think this might be a mistake. Sometimes I'm proven wrong, sometimes I'm proven right, but I let them do that. Otherwise, it's fundamentally important to do things, and also to make mistakes, to understand what is right and what is wrong. And many times I've been proven wrong. Sometimes proven also right, but it's not important to be right or wrong. Important is to be fast in adapting to what is right, or not to do or stop doing what is wrong. So that's the first thing. The second thing is, how do you keep people? Actually, how do you keep people during difficult times? So in that year and a half, of course, people were telling me, "Hey, we need to be on Facebook." I said, "I know we need to be on Facebook, but one thing is to say. The other one is, okay, but how do we get on Facebook?" So I think that you can choose in this moment to say, to be an optimist and to be to promise, to make a beautiful promise. But people are not stupid. So I always thought that people who work for me, we spend a lot of time to finding the best. They're actually smart. They're really smart. So we need to bring them inside and help be part of the solution, and not telling them, hey, everything is beautiful and don't worry. So when we had these issues where we were not on Facebook and people were also getting offers from other companies, I always said, look, I had a beautiful picture, I did a presentation once where we had a character called Mordillo. Basically you see this character on the beach, and then you had an umbrella, and Mordillo was sipping a cocktail on the beach under the sun. But then if you zoomed out, you would see that the beach was actually an hourglass and the sand was flowing down. And so I said, look, this is where we are now. We're still profitable. We have a loyal customer base. But if we do not solve, if we do not manage to get to Facebook, it's only a matter of time that we will be gone. So this is basically very early on, this was the image. And from there, we said, okay, how are we going to do that? We are dividing the company in two parts. I'm sorry for the 50%. Thank you so much for helping us to continue the business and staying profitable. That you are allowing us to take the experiment in these other 5 areas. And it was less fun to continue working in the existing business. But the reason why they were continuing, instead of working on the more funky projects on Facebook, was because they were helping the rest of the company. And the rest of the company was taking these different bets. And so I think transparency is very, very important. And also, treating people as adults. That's the second way, second part to your question. And the third part is, sometimes you can't hold people. Sometimes I had people coming to me and, I was going into a meeting knowing that he or she had resigned. And my task was to keep the person. And when I went in the meeting, I said, okay, tell me, what are you doing? Where are you going? Or what kind of things are you doing? And they told me, for example, I want to start my own company. I said, hey, great. You know what? Go, just do it. So I always try, first of all, to put on the hat of the person who works for me and try to understand what makes sense for them rather than what makes sense for the company, rather than trying to convince the person to stay in the company. If it didn't make sense, I would tell them, look, I think it's a great offer, go, have fun. And I hope that let's stay in touch. And many times people, some things went well, some others went less well. When they went well, I'm super happy for them. When it goes less well, then, the doors were always open to come back. Yeah, the door was always open.
Amazing. Maybe turning briefly, spending a little bit of time on what you did since you stepped out of your CEO role at King, which was mid-2019. Maybe from an emotional level, what was it like to, after I think almost 17 years, giving up your CEO seat in what was your baby and really what you grew to such amazing scale?
First of all, I never look back, I always look forward. But I think that, I met some I worked with amazing people. It's been always a joy. I'll never forget, we organize always once a year a big event called InfoMarket, where 2,000 people come together, and I usually open it, I present, etc. So it's a great feeling when you see so many people and amazing people. So of course, it's a bit sad to not to do that anymore. But it has not been suddenly I give the keys, bye-bye. It's been a process over time where I've been handing over my role and my task over a period of time, which was a longer period of time. And so it has never been an abrupt leaving, basically. And I always look forward. I'm busier than ever, actually, even now in these times. We set up with my co-founders a venture capital company. It's actually an angel fund, more or less, but it's only our money, so we didn't raise any money from outside. And we invest early on in things we think we understand. We focus on business and consumer, mobile, and we try to help others basically with what we have learned. And then I set up also.
Sweet Capital, which I think we've got lots of your founders on the call as well. So we're mixing First Minute and Sweet Capital portfolio on the call. So hopefully lots are listening.
Yes, I mean, we have Pippa and Christian on the call, Pippa, and they're amazing.
I've got one more question. Then I've got a super short quickfire round. And then I'd love to sort of leave a little bit of time for Q&A where people can simply message their questions and we'll unmute them. And we'll finish, I think, at 10 to 6, if that's okay with you. And one thing I did before the interview was basically go and talk to some people who have either worked with you as an advisor, you've been a mentor to them. I went to speak to one of your co-founders and just to hear what they say about you. And I'm going to read it out. One of them said, energetic, inspiring, insightful. Someone else said energetic as well, actually generous, positive. And someone said he's a timeless Italian gentleman born with unshakable resilience and integrity. As a mentor, he's supportive beyond limits. As a friend, he's the most fun and energetic, especially on the dance floor. And as a human being, he's very generous. So here's my question. How are you so likable? And what's the secret sauce in just getting everyone to like you? Because I don't think I met a single person who has a bad word to say about you.
I think you must have interviewed my friends.
I was just curious, like, do you ever get stressed? Do you ever get angry? Or is this just your composure that that's always positive?
I think that, in Italy they say that if you get angry, you do two efforts. One is to get angry, the second is to distress after you got angry. So I don't think there is a point in getting angry. It takes a lot before I get angry. I get angry only if I see that people do not put the effort, and that they don't think it through. So I expect from people really with whom I work at least, or to actually to think things through, but also more importantly to make an effort really to put their best. And if I see people actually don't care, then that's where I usually get angry. But it takes a long time. I don't get angry. I think there is no point.
And now, time for Q&A.
We're going to open the floor to questions. I have one from actually one of our portfolio founders, Jill, founder of Robin Games in LA. Robin Games is a mobile gaming studio also for women, going after the same demographic as Candy Crush. And I think, Jill, you should be unmuted.
Hi, can you hear me?
Yes, very well.
We can.
Perfect. Hi, Riccardo.
Hi.
This has been great. My question is, the UA landscape is crowded in mobile games, especially in casual today. And what would your advice be for a new studio releasing their first game?
My advice is to create something that is better than what is out there, basically innovative, and to really study the mechanics which are proven in games that are successful. And decompose the mechanics that are successful. So do not innovate everything. So try to take the bits and pieces that actually do work, but make the core game, the game mechanics basically different from what is out there. Otherwise, it's very difficult to succeed in this market. Because if it's, if a product is new and is great, marketing is cheap. If the product is already known, marketing is very expensive, and especially now. But now there's an opportunity because of COVID, because actually advertising is cheaper than what it was before.
Next up, we've got Lulu. So obviously you know Lulu well, founder of Kakua. You've been a super valuable advisor to her. And Kakua, for all of those of you who don't know, is an edutainment business based out of Nairobi in Kenya.
And Lulu is fantastic,
Lulu,
by the way. She's an incredible founder.
She's amazing.
Ciao, Lulu. Nice to hear you.
Nice to hear you too. You mentioned some of the brilliant ways you were innovative in your approach to making Candy Crush, from business model to game design. I was wondering, what were some innovative things you tried in marketing?
In marketing, well, I think basically how we started was with pure digital marketing. First on Facebook, where we could segment extremely well by the user groups. And then at some point we said, I think that, because the cost of marketing on Facebook was going up. And then we experimented with TV. And we did TV in specific locations where we had never done advertising before, in order to isolate those metrics. And then we saw that actually TV, especially when you couple TV with digital, can perform really, really well. And when the digital became very expensive, it was actually cheaper to buy TV than buying digital. So we coupled then TV and digital. So whatever we did, actually, everything we did it in a way that we could measure it. I think but if I may give you an advice, I think, and this advice, which is not just for games, I think the reason why we could scale Candy Crush so fast, spending so much money, is because we knew exactly how much we could spend. And so we started first analyzing what is the value of a customer over 1 week, over 1 month, over 2 months, the customer lifetime value, not only of the single customer, but also of how many customers this customer would actually provide us virally. So we knew that every user at the time was providing us other 2 users. And then knowing exactly when we buy, what kind of customer do we buy, the quality of that customer versus another platform, and how much does it cost us. So we know that, for example, if we buy a user with segmentation on Facebook, it's probably going to be worth more, but it's also going to cost us more than a user who we buy, I don't know, with a different type of advertising. So it's difficult to give you a price. There is no one price. There are millions, or there are hundreds of thousands of prices, depending on the country you buy, on the platform you buy, on the time of the year, et cetera, et cetera. And so when you optimize all of these, then you can do marketing very profitably. So get good people on the marketing side who understand the numbers behind and do a lot of experimentation is my advice.
The last one we've got from Vineet Kothari, who is the founder of Technic Capital in New York, which is a tech-focused hedge fund.
I would love to know if there are peers in the gaming industry, either individuals or companies, that you've been really impressed by and that you continue to be impressed by in terms of product innovation or business strategy around the world. And if so, what is it about what they're doing that you find so impressive?
So I think maybe just to repeat the question, it was a little bit a struggle to hear for me, but I think you said, what are the peers in the gaming world that you've been impressed by, either from a product perspective or how they've executed? Is that right, Vineet?
Yeah, well, I mean, I think that the difficult thing is to stay at the top. In my eyes, and I think that if you stay at the top, is because you're doing many things right, because you take many risks, because you put a lot of effort in experimentation, not only with new games but also in the existing games. And there are a few companies which are at the top. We are at the top. Ilka, from Supercell, they've done an incredible job. The guys at Playrix are doing an incredible job. So those are a few of the companies that I think have been doing really well. Then there are startups, but as I said, I think it's now a more difficult market than what it used to be, even a few years ago. But I learned one thing, that it's an area where, as any other area, where if you innovate, you can always get through and succeed, especially but you need to innovate.
Which isn't always easy. Thank you so much, Riccardo. You've been super generous with your time. We've run over a little, so apologies for that. But I think it's been fascinating and really such a privilege to get to interview you like this.